and welcome to Markets Today. I'm Lata Venkatesh, and joining me from Delhi News Centre is Surabhi Upadhyay. It was a choppy day of trade, and even after yesterday's huge 2.5% cuts on the Sensex and the Nifty, both the major indices actually ended flat to marginally in the red. But the silver lining was, after going to way below the 8,300 mark, the Nifty appeared to pull itself by the bootstraps. So perhaps, at least for the near term, a bottom appears to have been made. Hi, Surabhi.
Hi, Lada. Yes, what a day. Lots of volatility, and as you're saying, at least some recovery in the second half. Otherwise, it could have been much worse. Let's start with the top stories. Volatile day of trade on Dalal Street. The Nifty plunges below 8,300 intraday. Buying in the second half aids recovery, and benchmarks finally end virtually unchanged. Bank stocks lend support. IT shares gain, but oil and gas and FMCG stocks see pressure.
Smarter recovery in mid-caps. The index ends lower by about 0.2%, but after falling more than 1% intraday. Mid-cap pharma stocks like Aurobindo, RPG Life Sciences and Strides Arcolab gain, while PSU bank stocks like IOB, Syndicate and Union Bank ended weak.
Telecom stocks fall between 3 to 6% on concerns surrounding the Spectrum auction payout. Kotak says earnings estimates may have to be pruned in the near term. Macquarie sees company balance sheets getting strained.
Those are some of the themes that dominated market space today, and here are the experts that we have lined up on the show for you. Ajay Srivastava of Dimensions Consulting will join in to give us a sense of how much further markets could correct. Arvind Sanger and Yan Den will give us the FII view on how foreigners are reading the Indian market. And Seth Kleinman of Citigroup analyzes the global cues for crude oil and for gas and the possibility of further price declines for both.
Okay, so lots of opinion coming your way, but first let's start with the day's trading action. Volatility continues to rule the roost on Dalal Street. The key indices witnessed a sharp midday sell-off today before recovering to end on a flat note. A quick check of the weekly picture also indicates that it has been a torrid 7 sessions for the indices. The Nifty and the Sensex have lost about 2.5%, while the CNX mid-cap index is down about 2%. With that, let's now go across to Anuj Singhal for more details. Anuj, markets managing to bounce back by the end of the day, but does it offer any comfort? Well,
thank God it's Friday, and the bulls were really happy, especially with the second half today. The markets recovered. Recovery is actually a strong word after the kind of sell-off that we have seen, but still, small mercy is the fact that the market did not slide more after the kind of fall that we have seen. In fact, at one point it looked like the Nifty was going to break down even more after yesterday's fall. And today in mid-session, there was a decline that you saw on the Nifty, but there was a smart recovery in the second half, led by the banks, and the mid-caps also recovered quite a bit of lost ground. In fact, 200-point recovery for the mid-cap index. Let's talk about the stocks then. Banks led the recovery in the second half today. ICICI Bank was the top contributor, up 2%, SBI up 3%, and IndusInd Bank was up 2% as well. Apart from that, some other smart gainers today included stocks like Larsen & Toubro, Infosys, and also Tata Motors. All these stocks up between 2 to 3% in trade. On the losing side, you had telecom stocks that were clearly on top in terms of the spectrum use charges and the market sphere on that. So you have stocks like Bharti, Idea, and outside the index, Reliance Communication, all falling between 3 to 6%. Apart from that, some other prominent Nifty losers in today's trade included Reliance, which was actually at 52-week low today. ITC was down 1.5%, and Sun Pharma, even pharma stocks saw some profit booking in today's trade. And finally, in the mid-cap space, the stocks that really stood out, Aurobindo Pharma, that was one of the stocks of the day, up 6%, Hexaware up 7.5%, and Century Textiles up about 5%. So that's the day and the week. It's been a bad week for the bulls. We'll be hoping that some more short covering takes place in the early part of next week, and maybe April series is far better than the March series.
Oh yes, one would hope for that, wouldn't one, Anuj? Have a great weekend yourself. But just a point to note about the way in which the markets bounced back, and you could see it as well in the quality mid-caps. Witness, for instance, Thermax. The stock ended 0.3% higher, but look at the last-minute recovery that one saw in last 2 hours recovery in the Thermax share. Ditto for DCB. Actually, the stock itself ended about 5.3% higher, but look at the bounce that came in the last bit of trading. Tata Chemicals, another quality stock, 1.2% higher, but almost 1% of that came in the last hour of trade. IndusInd Bank, again a quality stock, 2.3% higher, along with all the other private sector banks. But again, look at the contribution from the last hour. Ditto for Ashok Leyland, Oro Pharma, which Anuj already discussed. So clearly, the last hour did see a lot of quality stocks getting buyers at lower levels.
All right, that was the market. Let's now move on to some market opinion. Ajay Srivastava, CEO of Dimensions Consulting, says the entry points in the market need to be carefully evaluated. He also says lots of policy certainties can be seen on a 12 to 18 month time horizon.
There are lots of positives building in the system. The problem is with the government is that while the longer term positives, in the immediate 12 to 18 month horizon, there are lots of dark clouds and uncertainties. And that's what's holding this rally back. One is overvaluation thanks to liquidity from abroad. The second is that I think in the immediate future, we are not seeing the traction that we had expected to see. So expectations are being pared down, which gives good credence that yes, it's a good bull run, but the entry points have to be carefully calibrated. Apart from international factors, the domestic market is looking very, very weak at this point of time. And therefore, you would tend to be more cautious than aggressive. And this is not, a correction which you really go aggressively buy. This is a correction you wait out and start, as we discussed last time, keep reallocating your portfolio away from where you made profits to newer sectors. Because newer sectors are going to give you better returns like industrials, metals, etc. compared to the older ones.
That's a brave contrarian call coming in from Ajay Srivastava. Now, for all the action from the futures and options space, Nigel D'Souza.
Well, the derivative data is quite interesting today because the Nifty ended more or less flattish. But take a look at the 8,500 call. The premium over there crashed from around 125 rupees to around 108 rupees, telling you there is aggressive writing at that particular level. And take a look at the 8,000 put. Now, the Nifty ended flat, but that one is close to around 300 points away from the current level. But over there, the premium didn't see any kind of correction. It was stable at around the 25 rupee mark, telling you that there was some low-level put buying as well. But the 8,400 put, that one needs to be noted because the premium over there fell from around 124 rupees to around 117 rupees. The wise traders, in fact, will be writing this particular strike and hoping that the Nifty can hold out at around that 8,250 odd mark. The 8,300 put as well did see the premium move from around 87 rupees to around 82 rupees approximately, telling you that, in fact, traders are counting on around that 8,200 to around 8,250, holding out at least for this series. Now, individual stocks that one focus, SBI did come in for a big short covering bounce, and that's what really led to a big recovery in the bank Nifty. L&T, meanwhile, that heavyweight as well, did see a bit of a short covering bounce. Idea as well as Bharati, both of them have been big outperformers. Both of them were getting sold into in today's trade itself, while Century Textiles as well as Hexaware, both of them did see big buying from the broader markets, while India Cements as well, that stock came in for a bit of a spanking, was down close to around 3%, shorting the scene on that counter as well.
Nigel, stay on with us. It's obviously been a really bad week for the markets. The Nifty and the Sensex losing around 2.5%. Before we let you go, take us through the trajectory of the market's fall since that high that we saw on the 4th of March. What are the numbers telling us?
Well, just on March 4th itself, we were sitting at around the 9,100 mark. So we have taken a good 800-point cut from the top, and that equates to nearly around a 9% cut. The big culprit there has to be the Bank Nifty. That's corrected close to around 12%, while the PSU Banking Index has corrected a good 17%. The mid-cap as well as the small-cap space, they have taken a hit of around 7 to around 10%. But take a look at the high beta spaces. You have something like a Realty Index that's lost close to around 15%. The Metal Index as well as the Infra Index, both of them are struggling in there. If you want to pick out one outperformer, it has to be the Farmer Index because that one is more or less flattish from the time we hit those highs, that is on March 4th. Now, the Nifty didn't have much of a chance because a lot of those heavyweight stocks, they were getting slammed. So take a look at ICICI Bank, that one's lost close to around 15%. L&T, Reliance Industries, ITC, HDFC, as well as HDFC Bank, throw in TCS over there as well. You have close to around 45% of the Nifty. That's taken a knock of around 9 to around 15%. That's why the Nifty didn't have much of a chance. The banking space, so the PSU banking stocks in particular, Bank of Baroda as well as PNB, both of them have taken a sharp knock. And SBI as well is in there. That one as well has taken a knock of close to around 18%. Cement stocks, they've got clawbacks, so they're down between around 11 to around 13%. While the metal index, Hindalco, came in for special punishment with that. That one has lost close to around 18%. A few other losers flashing for you on the screen, something like a BHEL, Kane India as well. Both of them have lost a goodish bit. But the PSU banks, they have taken a hit. take a look at some of those private sector banks. Yes Bank has lost close to around 13%. Kotak Mahindra Bank as well as IndusInd Bank, they are part of the losers list. But some winners are there. Have to be something like a Bharti Airtel, Lupin as well as Idea. They're in there with some marginal gains. Now the mid-cap index though, we have seen carnage over there on a few stocks. So some of those banking stocks, they've got slammed between around 18 to around 25%. Syndicate Bank, Orient Bank, Bank of India, Canara Bank, all of them flashing for you on the screen. So clearly the banking space hasn't been a great place to be in if you just take a look at it from the highs that we saw on March 4th. And finally, a few of the losers, something like a Bhushan Steel has corrected close to 40%. Unitech, Arvind, ISCI, all of them join the losers list.
Thanks a lot for that, Nigel. But losses are not restricted only to the stocks you mentioned. Telecom stocks, Bharti and Idea were under severe pressure today after regulatory overhang got lifted with the conclusion of the auctions. They've played a lot for the auctions and the stocks paid the price today. Reema Tendulkar is joining us to tell us what brokerages are making of the spectrum charges. Reema.
Thanks so much for that. So I'll start with Kotak, who says that the telecom auction may lead to some cuts in their near-term estimates. They say Bharti's auction payout was about 30% higher than estimates. But knowing that Bharti has achieved almost a pan-India 3G footprint and enhanced its 4G footprint. They also say that while there could be some cuts in the near term, the auctions does not change their medium-term positive view on the two listed incumbents, that's Bharti as well as Idea. Barclays says that yes, the top three operators have paid a high price, but they've also emerged much stronger with more spectrum, and the ability to raise prices from here on remains a potential positive catalyst. So they're overweight on Bharti and Idea and underweight on Reliance Communication. Macquarie also reiterates that the high pricing could pressure the balance sheet in the near term, but the regulatory overhang is now behind them. The investor focus will be on the core business drivers, which remains attractive. So they retain their outperform rating on Idea, which is their top pick, and on Bharti. And their target price on Idea stands at 215, and on Bharti it stands at 460. And they have upped the target price on both these players. Back to you.
All right, Reema, thank you so much for that. Now let's move our attention to the global arena. Oil prices have been falling in trade after this as the absence of fresh developments in Yemen eases off fears of a broader conflict in the Middle East. Goldman Sachs in a note today said that strikes in Yemen would have little effect on oil supplies. We spoke with Seth Kleinman, head of energy strategy at Citigroup earlier today, and he says that crude prices will continue to move downwards in the coming days. Listen in.
Well, I think we're heading lower. It's a question of how much we go lower. Look, the reason why it is worthwhile paying attention to Yemen, I mean, I think we need to go down sub $40 to really start to rein in supply. That said, geopolitics really bears watching here, and Yemen's a perfect example of that. You know, the world is a very volatile place right now, and it's only going to become more so because of the lower oil prices. No, it's going to be staying under these bearish pressures because as the low oil price filters through into the gas price, it's going to keep prices depressed. Somewhere between 8 to 10. As you head into the 4Q, you're going to see a higher demand profile just seasonally. That always happens. So as you see the Asians buying in preparation for winter, that can put a bit into the market. But somewhere between $8 to $10 is a pretty reasonable estimate for gas in Asia.
All right. That should be heartwarming for those who are watching India's inflation. Crude likely to remain sub $40 or at least go sub $40, and oil between $8 and $10 for the Asian side of buyers. Let's take a break on that note. But coming up, Arvind Sanger and Yan Den, two big foreign investors on their outlook on India. Of course, trading strategies as well.